Ira Epstein of Linn and Associates with your metal market wrap-up. And this wrap-up is for Wednesday, July 29th, 2020, time 6 p.m. Central Time. As you can see in the gold market, I waited today for the market to reopen up another $10, $1963.60. But we're seeing cracks in this big bull market starting to show up, believe it or not, in silver, platinum, and palladium. You'll see that in the charts in a moment. In the stock indices, the market's able to hold on right here. Tomorrow we get the second quarter GDP numbers, and it's supposed to be a whopper bad. 34% decline is the guess right now. Got to pay attention to that. Energy markets fairly stable. Bonds and notes still getting something of a bid. And the highlight of the day, of course, was the Fed chair's talk. And I walked away thinking that the door is opening for the Fed to not only look at short-term rates where they have the greatest influence, but they've accomplished that. Now moving on down the curve yield, looking at the 30 and the 10-year. Wow, that's a bit of a difference. And if they do that, be interesting. It'll flatten that part of the market down. What does that do for housing, long-term rates? Many things tied to other rates. The idea that rates are going to pick up here and go back up, I didn't get that from what the Fed said at all. COVID, real problem, flaring up all over the United States. You've got to keep your eye on it. Very serious situation. If you look at what's going on in the foreign currencies, you're over with 118 in the euro. The dollar index could easily crack here if it starts down again. This 93 level, we'll see what it's capable of. But there'll be a point where that rubber band snaps. It gets too far. The market out of nowhere gives you a correction. And I use the word out of nowhere. And when that correction sets in, the question is, are you there, ready? Have you taken money off the top part, ready to buy on the brakes? I could be wrong. Maybe it just moves away indefinitely. The gold market feels like an indefinite move. Here we are at the close of business on Wednesday, and we're up $66 at a new all-time high close. When you take a look at the chart action, well, you can see once you broke out of this sideways action right here, it just took off to the upside. The pattern is still one where we have not had a lower low day in almost 2 weeks. In other words, we haven't taken out where the market broke through the previous day's low. That is a sign you caught a lot of the open interest, in my opinion, short. This is the August gold. Beware that I am going to move you next week to the December contract. I had one of you write me, why isn't DOC the popular contract? Well, there's no, number one, October silver. You like to get the gold-silver ratio going. Number two, tradition. That's what it's about. Where do the hedgers go in the market? Not the speculators, the hedgers. They like that end-of-the-year DEES contract. So the OC contract, yeah, it'll be the lead month, but believe me, it'll be the DEES that gets all the fanfare, and that's what you look at. So market going up here, you can see you're still over the 18-day average, which is over the 100, which is over the 200, a classic bull setup. What about the Bollinger Band? Well, you've got 7 days in a row over it. Pretty big number. I challenge you, go back on your charts. How many times do you find the front month has 7 days in a row over it? They're very rare. They do occur. I've seen 9, in fact, over it. You don't get much beyond it. So we're ready for that move to the right-hand side. That's all that it means. That's all that it means. We have done what I call the gorilla glue. What is gorilla glue? Well, it's not what you're going to go to Home Depot, Lowe's, or Menards for. That's not what's happening. Let me mention Ace too. Good people there. It's that the market keeps staying every single day on that upper Bollinger Band. That's what I call the glue. And it doesn't let those that say, oh, the market's going to break, the market's going to break back. That's not what the Bollinger Band theory is. And the market has done itself up. So yes, it broke in this particular instance. My rule of thumb that each consecutive day over a Bollinger Band takes away one of the 5 percentage points of 5% of the time that the Bollinger Band, you will stay over the upper Bollinger Band. You take that away, and then you get a high percentage you're going to correct. Didn't work. That's okay. The way that you know that I talk to you, would you ever be short, am I ever talking to be short over, number one, the 18-day average of closes? Only if you lose an embedded reading. That's the rule. Number two, Do I ever tell you to go short because you're over a Bollinger Band? You'll never hear it from me. I also don't tell you to buy over a Bollinger Band. You won't hear me tell you to buy over it. So there's a lot of things I won't do, but there's a heck of a lot I will. The embedded reading is still here. That tells me on a good shakeout until that red number closes under 80, I expect the pros are going to step in the market to buy the market on the first opportunity they can get their hands on. The gold-silver ratio really hasn't changed. It continues to break away. Remember, this was 1 1/4. It's lost 45 points, or about a third of its value. When we look at the silver market, there you go. This is more or less how I expect markets to act normally. I admit the public is buying gold like there's no tomorrow. You see it in the ETF inflows. You see it every day on CNBC, Fox. You see it on all the news headlines, Bloomberg. All of them talk about it. But you're getting your little correction. What else happened? In my morning subscriber research report, at 11:30 today, I warned traders, you're losing the embedded reading. It might be time to back out of the market. Take the money off the table. That's exactly what I said. Well, I don't feel bad saying that. There's a point where you wait and see if the market's going to lose it. When you lose this, it's often, the word is not always, but it is often, the market, you'll find price makes a run at the 18-day average of closes. In the copper market itself, we do have a pattern of higher lows, higher highs. It went back into an uptrend. Support 290.15, the 18-day average. You lose control of that if you get under 287.90. Momentum has, past tense, has corrected and is flattening out. I would expect to see the pros, once they see the GDP number in the morning, to make a decision, is it worthwhile on their part to start nibbling again into the long side of this. I'd want to see those numbers myself. When I look at the platinum, here you go again. You're losing the embedded reading. So that's what I'm saying. You're at a point where some of this is finally getting itself lost. You did the same thing in the palladium market, and look at how this market broke down. It did drop today, $104 an ounce, lost the embedded reading on the close, and it still hasn't lost. It would take a major event to get this to re-embed. So the 18-day average is likely the target of the market. And when we come to the dollar index, there'll be a point where this market starts saying enough's enough and I'm going to give you a bounce. Don't know where that is. What else do you see? The gorilla glue trade, right? Look at how it's just locked in on that. And if you look at this since back over here, right here, specific, you haven't had a day where you've taken out a previous day. It's almost a flip of what the gold market is doing. Very interesting as I see it. Now, you've got to be like me. You wake up in the morning and you go like this, wow, what's today going to hold? How are my positions overnight holding? Because, you know, a lot of us, if you're a trader, I won't say us, you, a lot of you that are traders, you hold your positions. Some day trade only, others do other things. Well, how I work is I wake up 3:34 in the morning, every morning, and I start reading. I'm sitting there and I'm reading in bed, doing whatever I'm doing. By the time I roll out, I already have a pretty darn good idea as to what's going on in Asia and Europe. Have my coffee in the morning and away I go. Now I'm reading even more. I'm trying to figure out what the news is on all these markets, and I start covering. Before I record, I write down all my notes and I present them to you in the morning as the headlines as to what the day is going to hold. So you get the news, then we're going to start doing all the chart action, and I cover the markets in this way each and every time. I realize time, it could be your enemy. I know that. So at the bottom on our website, if you go to that, you'll see there's a scroll bar. And as you're moving the scroll bar to light up meat markets, grains, softs, wherever section you want to save you time. Each video is approximately 20 minutes long. And believe me, I'm a technician. I'm giving you everything I've got at that point. If I tell you, hey, I see nothing, it's because I see nothing. I was doing my spider ETF video today. I would say 80% of what I said today was there's nothing that I see to do. That's worth something in itself. So You come with this, you see what's going on. I cover all these markets. It's 40 charts for you, by the way, with very specific trade ideas. I am not bashful. For those of you that watch me all the time, and I know that I've got a big following out there, that's the one thing I pride myself on, not being bashful. The charts, they're going to look that way, jet black. They're going to have more studies. They're going to have a lot more information. For all this, you're going to get live webinar access. You're going to get, and you have already, my brand new weekend videos. I know a lot of you want longer term charts. You don't want the day-to-day. So I go to the weekend charts for you, and on the weekend, I'm giving you the same buy and sell signals with bigger risks sometimes because they're weekly charts, but the same concept. If I see during the week there should be a big change on a weekly chart in my daily or morning subscriber videos, whatever one I'm doing, you're going to hear about it there. How do you find out more? Well, go to our website. It's all there for you. You can go there by going to www.iraepstein.com. Under the word research is where it's at. You can always call my staff. They'll work with you as well. I'm Ira. You have a good day, and I will talk to you all tomorrow.